What's up, everybody? Real Trader Joe here, and welcome to the first episode of the Afternoon Cup of Joe, where I go over the markets in real time and sort of go over the portfolios. So happy to have everybody with us. NQ up about 0.5%, 78. ES up about 15, and YM up about 64. Pretty muted day on the market overall, and surprisingly the VIX also increasing up to about 1290. Haven't quite hit 13 yet, but interesting to see volatility rising with this last, I don't even know that I'd call it a rally, just an uptick in the markets. And this is pretty interesting. Usually when the market goes up, volatility goes down if people are getting long, but an increase in volatility with this increase in all the other major futures may indicate some instability here. Crude down slightly. I'm thinking about placing a trade, not in the crude futures themselves, but maybe in like a micro. I think crude's taking a beating and maybe getting long on it's not so bad here at the bottom. My portfolio overall, I gotta say, even though the market has rallied, NQ up about 0.5%, up 78 points, doesn't really feel that bullish to me. Mainly characterized, I think, by the FANG stocks. You got Apple and Amazon and META. I actually haven't checked Apple today, but let's go check Apple. I bet you it's probably up if we go to the tasty default and we go to Apple. No, okay, so Apple is actually down today, but made a massive like 3% rally, and it's probably responsible for a good portion of that NASDAQ rally in conjunction with Amazon. A lot of the semiconductor stocks are taking it on the chin today, as to be expected. Most of the losses that I'm encountering today are on Roku. I've got an 85 put here. I think it'll hold, and we'll see if we can hit that floor and bounce off it or not. As far as trades I placed today, I doubled down on short naked Intel calls, much to my chagrin so far, but we're short now 2 50 strike calls, 74 short shares. So I'm really trying to burn Intel to the ground here. I don't think Intel has a leg to stand on in comparison to AMD and TSM and a lot of the other microchip stocks out there. So this is a double play. Number one, I'm hoping that in the event of a drop that I can capitalize on Intel. But number two, my bullish positions in AMD, ARM, and Roku are going to be offset by Intel most likely in the event of a market-wide drop. So it's a play on Intel specifically because I want Intel to burn and pillage, but it's also a hedge in the tech-heavy space. So was more than happy to double down here for about 600 additional buying power, and looking pretty so far. $3 out of the money, 61 IB rank. We got earnings coming up. More than happy to hold these through earnings and get short at about 50. So even though I'm a little bit leveraged there, I'm not too concerned. It's really not too expensive of a trade, pretty capital efficient, and still very much out of the money. So happy to put that one on. Also happy to report that coin is almost back to even. We've made a wealth of adjustments to this trade, and if we go in here to the order chains, you can see we've had quite the story. We put the 105 210 strangle on in December, and had we actually kept that, might have done okay, but we did some rolls. We rolled at the 21-day mark without a profit, because at that point it was fairly close to 210, so we weren't able to roll profitably, but just about back to even, and of course not looking to collect the whole $9.52 on this trade. That would be ridiculous. I'd be happy to collect half that. We collected $4 on order entry. I'd be happy with $2 or $3 out of this trade, but no reason, to take it off early. If it ain't broke, we don't have to fix it. We're nowhere close to either of the short strikes, and we have plenty of upside room if this thing decides to kick back up to 180. So I'd also be happy not owning coin at 125, but if it gets down to 125, I'd be happy to adjust the strikes again, and at about 100 I'd start to feel comfortable with it. So that's coin. GDX just nursing a short straddle. Had the short straddle on for years. Looks like it's going to go for another 65 days. I know I'm kind of going out of order here, but Amazon. Interestingly, Amazon's one of the few tech stocks that are up today. I guess the whole market is up as far as the NASDAQ's concerned, but my portfolio doesn't feel like it. So, short strangle. We're slightly short at about 16 deltas. I'm happy to remain short and not adjust this. The overall portfolio deltas are slightly bullish. Yeah, I really think that that end of year rally and the volatility we're seeing now, January being all over the place, I think that room between short strikes is probably at a premium. So I'm not really going to touch anything in the portfolio unless it's in dire straits. I did place a long vertical spread on Lululemon yesterday. Bearish, and it seems to be working out, or not yesterday, the day before, but seems to be working out pretty well. We're up, about 73 cents on the trade, well into the money. And I'm happy to keep this on in the event that this rally loses steam. And this is just by assumption. May not matter. But yeah, I mean, it looks like you could interpret this a number of ways. You can interpret this as just a lower high, an attempt to get back to previous highs, and we'll see if this fails. If this fails, we may start to establish lower lows and lower highs and kind of go the other direction. On the other hand, this is probably also, in some people's minds, just a normal pullback, right? I mean, you had all this price action in just the NASDAQ and ES and kind of mirroring that same thing. So wouldn't be surprised at all to see markets go higher. My portfolio is actually geared towards that, but I'm also realistic, and January is a pretty volatile month for stocks. Anyway, so happy to keep these bearish positions on, and I added one to of the portfolio with Lululemon just to give ourselves a bit of extra insurance. If you actually look at the beta weighted deltas, we are pretty heavily couched in semiconductors. Maybe a bit of a foolish move given that AMD's had a 100% rally over the course of last year, but 357 credit, only about $2,000 taken from me, really capital efficient, and with a probability of 77%, I can't pass that up. Anytime you're getting more than 10% on your capital, and you got a 77% profit, why not? ARM, same story, 250 with about 1,000 in reserve, 25% capital efficient, and I'm really happy with where the portfolio is at, even if we have a down day today, reaching about 2% or close to 2% in terms of overall return on the year to date. So in the last 10 days, I've almost made 2% on my portfolio, which is great, but it's also, as Winston Churchill said, not something you're going to win a war on with the evacuations. The last 2 months of 2023 were pretty brutal with all these short strangles, so I'm really trying to keep my strategies diverse. Short puts in the semiconductor space. I've got the strangles on in Enphase, Coin, and Amazon. I've got 2 short calls in Intel, and I've got a debit spread here that's bearish on Lulu. Also, can't believe I totally didn't mention it, but META. I've had enough of this. It's time to set the torch to this stock. This is absurd. It's literally just a 45 straight upward, and I'm spitting in its face. I am defying death with this trade. I can't take it anymore. This has gone too far. Mark Zuckerberg needs to be stopped, and I would be more than happy to see this tank even down to 340 or even 300. It's a defined risk trade. I can only make $1.52, but let's actually take a look at the mechanics of this one for a second, because traditional credit spreads, you'd go around 30 delta and you'd have about a 67% chance, but look at the credit we collect here. So we have a 67% pop. Typically that sees a credit of about $1.33, and if we go to 30 delta, that's probably around what we'll actually collect, $1.30, but you have a 73% pop. I opted for the normal 67% pop with the intention to take more credit in, so I was happy with the extra 30 cents. Look at our P50 here, 75% P50, so this is a really nice credit spread, and I think one that is better than your traditional credit spread. I actually saw Sosnow do the same thing. Not that I feel vindicated by that, I kind of do, but I think he put on a similar trade. Let's take a look at something that he put on. Yeah, he put on a vertical, the 390-400, so his account's way larger than mine. He can do a 10 wide spread. I can't. That would be irresponsible. Not that I can't, but that would be irresponsible of me to risk, like 800. Actually, on second thought, now that I think about it, I mean, yeah, at 800, I'm probably risking like 1.5%, but I still, with a trade like this, I'm not going to go too crazy. There's a chance this rally could continue. But either way, we will let the markets decide. I'd be happy with flat, I'd be happy with down slightly, I'd be happy with anywhere except massively up, which is where this has been going for the last God knows how long, so could totally be wrong, but we'll see. Our 16 put is already almost tested, and historically, this hasn't really seemed that great. Pretty much a straight 45-degree 45-degree downward angle, but maybe we'll get a bounce here. I don't know. It's a cheap stock. I was happy to play the percentages. I get about 10% on my capital, a little more than 10% actually, and we still have a decent percentage of profit from when we took the trade on. So that's the portfolio in a nutshell, guys. I'd be happy to hear your thoughts on where the market is going. We'll keep this one short, and I'll go ahead and get out of your way. If you learned something useful or would like to see more of this content, please don't forget to like, comment, and subscribe. See you next time.